Hello, everybody. Welcome to this Facebook and YouTube Live brought to you by Gananga Futures. So today we are going to discover trading strategies in crude oil. Okay. We will just wait for a while everybody, more people to come into this live show. So we will begin at 8:30. So today we are going to interview a full-time prop trader and to see how can we spot trading opportunities in the CME crude oil. I'm sure that many of you here would know that the crude oil market is a very volatile. So that's why there are also plenty of trading opportunities in the crude oil market. So before we begin, right, at 8 later afterwards, we are going to give away Netflix gift card. So for you to win this prize, you are going to participate in this virtual trading game by Gananga Futures. So for you to participate in that game, you will need to first open a virtual account with the virtual trading game by Gananga Futures. So let me just give you the link here. Yes, hi, Kelvin. Thanks for saying hi to us. We have actually put the link to register for the virtual trading in the post. Yeah. So if you haven't registered yet, don't worry. You can actually create an account. Okay. So I've just posted the virtual trading sign up link in the Facebook and also YouTube. So you can sign up first while we wait for other people to come. Okay. Just open up a virtual trading account, and then after that we will launch the game. All right. Yeah, there are about 40 people here already. So before we begin, right? Yes, hello, Lai Ming. Before we begin, right? Appreciate it if you can help us to share this, YouTube video and also Facebook Live on your social media, so that we can reach out to more people, more friends that could benefit from this session. So if you can, if you like what we are doing, okay, smash the like button and also share this YouTube and also Facebook live video to your social media so that you can reach out to more people. All right. Okay, it is about 8:30. So let me just share my screen and we will start right away. Okay. Okay. Hang on, yeah. Okay, well, welcome everybody to this session, which is brought to you by Gananga Futures. So today we are going to do this topic, which is discover trading opportunities in the CME crude oil market. So we will study what are the key fundamentals that drive crude oil prices, navigate the market trend by using the trend analysis and technical oscillators, and how to create a simple plan to trade the crude oil contracts. So today, our guest here on our Facebook and YouTube Live is none other than David Ng, who is a full-time prop trader with IcebergX Sdn Bhd. So today, we are very honored to have David on our show today. Hello, David.
Hi, Shane.
Yeah, good to have you here.
Yeah,
So,
pleasure.
yeah, as everyone know, right, crude oil is a very volatile market. So that's why we have plenty of trading opportunities in the crude oil market. And the crude oil is also a very complicated subject because it involves geopolitics and worldwide supply and demand dynamics that we didn't understand. So today we are very lucky because we have a very experienced trader who will come here to talk about the crude oil market and especially how you can spot trading opportunities in the CME crude oil. All right. So this is what we are going to do. Allow me to briefly introduce David. And David is a full-time prop trader with IcebergX Sdn Bhd. So he is very experienced in the full-time trading, be it in our local FCPO, FKLI, and also foreign index futures as well. So he also often give comments to media such as TheStar, TheEdge, and so on. So today we're going to look into the key fundamentals that drive the crude oil price and how you can create a trading plan. So you can learn directly, okay, from how full-time traders means that they trade it for a living. So you can learn directly from full-time trader how to trade the crude oil contracts. Okay. So without further ado, let me just kickstart the session. So David, later I'm going to ask you a few questions, right? So let me just stop sharing my screen and turn it to the presentation mode. Just give me a minute. Okay. Sorry, David, are you ready?
Yeah, sure. Yeah.
I prepare a few questions to ask you.
Yep.
And for our friends here who just joined, right? If you can help us to share this Facebook Live, that would be very appreciated, much appreciated, so that more people, we can reach out to more people. And for those of you who just newly joined, right, you can also click the virtual trading sign up so that you can create an account to participate in our virtual trading game afterwards. All right. So, David, okay,
Yep.
let me just ask you now, why should we look at the crude oil market right now or even trade the market? So, what are the recent developments in the crude oil market?
Yeah, Shane, thank you for the question. In fact, actually, I created some slides. Don't mind if I just share my slide as
Sure,
well.
please go ahead.
That probably will give you a greater insights on the question
Yeah.
that you asked. Okay, Shane, just want to check. Are you able to see my screen?
Yes, your
Yeah.
full screen right now.
Okay, thank you. Yeah. So that's a great question. Well, just before I start, just like to thank Kananga as well as Shane from Welford to invite me today on this platform to talk on crude oil. Now I think it's important for us to look into crude oil market right now is because if you look at the prices lately, last year we had seen for the first time negative prices in history, and
Yeah.
obviously this year 2021 we are looking crude oil price at about $60 to $80, which is considered quite high. It's a remarkable recovery. So if you are someone new to this space, I think it's worth to look at. Crude oil I think is a very key product to look at right now. Now, I think in any public presentation, it's good for me to put a general disclaimer. I think whatever I present here is purely based on my personal opinion. It doesn't represent any of Kananga's point of view. It's purely based on my personal opinion. And obviously, I'm talking about crude oil. It involves futures market. So futures as an instrument is risky. So you do have to consult with a licensed advisor in order for you to take the next step. Now, I think just going back to the question, I think it's important that the major recovery that we see in crude oil market is actually down to the economy recovery. Obviously, last year we were hit by the COVID pandemic. Most of the major economies shut down, and that's the major reason why we're seeing negative prices for the first time in history. Obviously, 2021, everybody is expecting is a year of recovery. So you look at some of the IMF projections lately, it shows that across the board, majority of the countries are actually improving. The only question is that there's a bit of discrepancy in the sense that certain major economies like US or even in China, for instance, are going much better compared to other emerging markets. But nevertheless, I think overall it's still positive. So economy is indeed recovering. So I think that really drive the crude oil prices higher. Now, I think clear enough. You look at besides crude oil, you look at commodities in general. Last year we were talking about commodity super cycle because you look at grains, you look at crude oil, for example, you look at majority of the other commodity classes has actually increased in their price tremendously. So I think the talk of commodity super cycle is going to re-emerge as a major theme going forward. But all these are being led by the global recovery. So you look at world trade also improving. You can see the BDI index, which track the shipments index across the world, is actually increased to I think almost to 3 or 4 years high. and you look at some of the prices, logistical prices is actually increasing day by day. So those involved in the logistics sectors, they're feeling the pain, because not only you're facing crude oil, high crude oil price, you're also facing log jam in across some of the major ports, especially in China. Recently, I think there's a news that's saying that certain ports in China is actually shut down because of the COVID-19, the spread of COVID-19 variant. So all these are creating a lot of logistical nightmare, and that actually causes prices to increase. So eventually, you'll creep up into inflation. But nevertheless, the story and the narrative remains. It shows that the global economy is indeed recovering. We are in a strong recovery. Obviously, the major headwind that we are foreseeing right now is obviously the aggressiveness of the new variant, the COVID-19 variant, which is the Delta variant. That could potentially change the whole game. So I think it's important for us to really look into this type of developments across the market, because eventually it will have impact on crude oil prices. But if you look at it in terms of the medium term trend, I think generally the economy around the world is recovering. But obviously, I think as we go into day by day, the new Delta variant is actually creating a lot of havoc in some of the major economies. So I think if you are watching the market, do watch out on this space, because it might have an impact in terms of your supply and demand, more towards the demand, because now everybody expecting economy to recover, demand to be strong. But if that's not the case, you should see crude oil prices would tend to soften. So I think that's something that we really have to observe, and we have to monitor closely. Now, just to give you a very overview of crude oil price. Now, obviously, last year, we for the first time we've seen in history a negative oil price environment. Although that's short-lived, because of the rollover contracts, and obviously on the spot market, it was some massive glut that causes a negative pricing. But forever, the chart will be tainted, with a negative price. So if you look at the chart, we went to as low as -40 on the WTI. But obviously, since then, we have seen massive recovery, because this is in line and in tandem with the global economy recovery. Now, I just want to bring your attention before the COVID pandemic hits. If you notice that crude oil environment back in after the global financial crisis, we did see strong growth. And in terms, you look at a price, it went as high as $110 per barrel. But that was the highest peak we've ever seen. Then after that, prices tend to soften. Now, there's a lot of situation that lead into the price softness from $100 right down to $30. I think the main narrative is because US being a net importer, has become a net exporter country. I think US Congress also passed a bill to say that they are allowed to export crude oil back in 2015. So with so much supply coming to the market, that's why you see prices cannot hold around $100 for long. And obviously, the boom of shale oil is also a major supply, contributing major supply into the market. So obviously, this narrative causes the crude oil price from as high as 110, it went over all the way down to $30 per barrel. But what happens between 2015 to before COVID-19 hits us? You can notice that the range between $30 to $75 has been quite a tight range for many years. Obviously, the $70 to $80 mark is going to be a very strong resistance in the near term. Whether we could break that $80 again, it very much depends on how strong the recovery is going to play out. Obviously, the headwind now, we have the COVID new variant that's causing a lot of havoc. That might change the whole game. But what is important is that we have been trading between this $30 to $80 range for quite a long time. So once you break that top resistance at $80, I think we are going to enter into a new cycle for the crude oil market. And that's where the narrative, some markets are saying, could we see the $100 again? I think that will definitely reappear and rediscuss once we break the $80. But until then, I think this range is going to play out for quite a long time, which means to say that, I think the top side, the immediate resistance is going to be between $70 to $80 per barrel on the WTI. So that's overview of crude oil price. Obviously, I think, you look at, besides US, China is also recovering well. In fact, China was the first country that went into the COVID pandemic, and they were the first country to come out of the COVID-19 pandemic. So clearly you can see, their numbers are showing very strong signs. Obviously, the key thing to watch is that the past couple of weeks or months, uh, China did show a bit sign of weakness in the sense that their retail sales and momentum has actually slowed down quite substantially. So this is actually a sign of concern. The reason being is because China is actually a very big consumer in the commodity space. So whether you look into metal or you look into grains or look into crude oil, China is always a big player because the size of the economy and the size of the population. So if you want to assess how strong the demand of crude oil is going to play out, just look at China. If China can continue to grow, can continue to sustain their economy, then very likely, crude oil can still find support. But obviously, when China starts to slow down, especially if there's some telltale signs like retail sales are slowing, industrial outputs are also showing you weakness, I think that's usually the first sign that you have to be careful of. So I think going forward, another factor should look at, whenever you want to look in the crude oil market is look at China, because China is obviously a very big player in the commodity space. So I think just to give you a very brief composition of the top producers and top consumption economy in terms of crude oil. So obviously, the major producers are, you have the OPEC and you have the OPEC Plus, which include Russia, and obviously United States came into the picture, I think probably 3 or 4 years ago. So these three contribute roughly 60 to 70% of total crude oil production in the world. So obviously any impact from OPEC does have an impact to the overall price. So if you are trading the market, if you are wanting to really try your hands in the crude oil market, you must watch out what OPEC does, because whatever OPEC does, it will have a major impact on the oil price. Later, probably in the next couple of questions that we're going to go through, we are able to see whether how OPEC decisions can actually affect the crude oil market itself. In terms of consumption, obviously China and India is always the top because of their size of the economy and the size of the population. US is also very big in a sense, but nevertheless, US has now become a next exporter. So this is roughly the picture of how the supply and demand dynamics in the crude oil space. So important to watch. Once we know which are the country that are the biggest producer and which are the country that are the biggest consumer, we need to watch out on what are the countries' development. Are they still showing sign of growth? And if not, I think that is something that we have to be careful of going forward. So hopefully I can give you some insights into the question that you asked, Shane.
Yeah.
Yeah.
Certainly. Thanks for letting us know about the current development in the crude oil market. And then just now you also briefly mentioned about supply and demand, right? So may I know what are the current supply and demand dynamic in the crude oil market? And then besides supply and demand, right, what other factors can affect the crude oil prices?
Yeah, that's a very good question. So crude oil as a commodity is the same across other commodities as well. It's always the price of a commodity is always determined by the supply and demand balance. So as long as supply doesn't match demand, there's always a price adjustment. Whether it's on the upside or downside, if you don't have a balance, prices will adjust. So just to go through some of the supply and demand drivers for crude oil. So obviously supply is always based on OPEC. And OPEC, you have many of the representing countries. Obviously, is the biggest one that is involved with Saudi Arabia and UAE. In that region, they are very huge. And of late, OPEC has actually increased their membership to extend their membership to other countries. So that's why we have OPEC Plus, which include Russia. Russia is actually a very big game changer of late. If you study the history of crude oil production, Russia all the while has been actually very slow in the beginning of 90s because that's where they start to come out from Cold War and whatnot. But really when you go into the early 2000, that's where you see Russia production starts to increase, and they really capitalize on the increase in oil prices. So Russia is actually getting to be a very major contributor in terms of the world supply. So when you look at supply, we always look into OPEC and OPEC Plus. And obviously, I mentioned earlier, back in 2015, US starts to come into the picture. US, when the US Congress allowed US oil producers to export their oil, I think that changed the whole game. So now US is also a major player in the total oil supply scene. So like I said, these three major countries contribute roughly about 60 to 70% of total crude oil production in the world. So as long as OPEC make a decision to control their supply, I think prices will react. So just take for example, I think just back in late June, we saw that OPEC make a decision to wanting to cut or release more production, but I think UAE never agreed, as because UAE is one of the member of OPEC, and that actually causes a bit of a panic in the market. That's why you see, WTI rallied from $72 right to as high as 78 to $79. So that shows the impact of OPEC in terms of the market pricing. So obviously, I think by early August they make a resolution to slowly increase the production of crude oil in the market by 400,000 barrels per day, and that actually pushed down the price lower. So that's why you see prices, WTI especially, went to below the $70 mark. So it goes to show, I think OPEC plays a major important role in the whole supply dynamics. Now this is just to show you, whenever OPEC cannot make a decision to cut, that's where you see prices collapse. So I think this happens, I think, back in early in the onset of COVID-19 pandemic, where Russia couldn't agree on OPEC's cut, and therefore prices just plunged. Obviously, they came back to the table, and finally they reached a deal. And until I think of recently, there's another breakdown of OPEC talk between UAE and Saudi Arabia. That again also show prices increase because there's no resolution in the talk. So OPEC decisions are very important whenever you look into the crude oil space, especially because it does affect the overall supply of the market. Now, consumption side and is pretty much depending on the three major economy. Obviously, you have US, China, being a very major consumer of crude oil. So, consumption-wise, you really have to look into these two economies. As long as they are growing, their consumption will increase. Crude oil price will remain steady. Now, this is I gotten from EIA. It shows their projection in terms of production and consumption. So clearly, you can see that last year we have a plunge in consumption because COVID-19 just hit us. Production continued to decrease, but it didn't decrease fast enough. That's why you saw a plunge in oil prices. Now, going into 2021, a lot of market forecasting that consumption should be able to pick up and even should be even higher than production, in a sense that the market is going to be a very tight market. So stocks is going to come down and therefore price is going to go up. Now, obviously, this projection might change time to time, given the fact that we have COVID with the COVID-19 new variant, the Delta variant is getting very aggressive across many of the major economies. I think that's going to be a game changer in times to come. So, really, I think if you're looking at the crude oil space, you need to understand a fair amount of balance. What is the consumption and supply dynamics? Right now we're in a situation where we are expecting consumption should be higher than production, and we should be able to see higher prices. But with the COVID-19 new variant that's coming to the market, reaching certain major economies, I think that can affect consumption. So forecasts can change, and eventually do watch out on EIA reports. They do publish on monthly basis. So if they start to project consumption to come down, I think prices will also have to adjust. So I think this was last month's forecast. They are slowly forecasting that oil demand might actually soften a bit because you look at US, certain cities are actually in lockdown, so it might have an impact in terms of consumption. So I think that's pretty much the supply and demand dynamics right now in the crude oil market.
Okay, thank you so much, David, for sharing your insights with us. Now, beside this, right, what should we be aware of when we want to trade the crude oil in terms of like news? What kind of news? What kind of fundamentals that we need to be aware of?
Yeah, very good question. Now I know that understanding all this, it requires a lot of tedious effort. The important thing about trading any commodities, regardless whether it's crude oil or any other type of commodities, is important for us to assess the supply and consumption balance. Because if a market is rallying and we cannot find a reason that attribute to it, then we will miss the whole narrative. So I think some of the key reports that we really need to watch out is, obviously in crude oil space, you have the EIA, you have the which publish weekly data, which publish monthly data. Even the IEA also, they do publish on monthly basis. So I think when you trade commodities, it's important for us to look into the supply and balance, supply demand balance. I know a lot of traders will disregard to a certain extent fundamentals.
Mm.
Ultimately it's the price that reflects whatever fundamental there is. But if you go into the market without understanding the narrative or understanding what actually happens in the market, you could caught yourself in a very tight situation. And especially crude oil, when things starts to change, when fundamentals starts to change, prices will react very fast. So I think that's something that we need to be aware of. So going back into the question, what are the key reports that we really need to look at? So obviously one is the EIA. We have the weekly crude oil data in terms of the inventory. We have also the monthly EIA price projection, which I showed you in this chart here. They do publish on a monthly basis and they do update their prediction. So if they start to see consumption start to be weak, then they'll publish into their forecast. So I think that's, as a trader, we really need to watch out on these few key several reports. And on top of that, there's also other reports that's also worth to look at. Obviously, the economy's GDP. So example like China's GDP, US GDP, because that, as I said, these are the major big consumer countries. They do need a lot of oil. So when these countries are start to slow down in terms of their growth, and that's where you need to be very careful. So I think that's some of the key reports that you can look at. Now, if you are a bit more advanced in terms of looking to the market or you have been trading, obviously another report is called the CFTC report, which published on every Friday. So in this CFTC report, it shows you how many net positions in the market, whether the crude oil market right now is net long or net short. So obviously, if you see a current rally in the crude oil price, the net position is positive. That means the sentiment is still good. But if you see a rally in crude oil price, but the net position is negative, that tells you that a lot of players in the market has already starting to liquidate their position and may even hold short positions. So I think that's another important report that one should look at whenever they're trading the crude oil market.
These reports are free, right?
Yes. So you can get EIA reports from EIA website. You can just Google EIA or even IEA. So all these reports, they are all available to you for free. The only thing is that is it gets a bit tedious. You need to make sure that every week, or like the EIA weekly report, which comes out every Wednesday, 10:30 Malaysia time. So I think that's where you need to be a bit more tedious in that sense lah. And when you look at CFTC reports on every Friday. So it depends on, you can always Google it, you can get it from a lot of sources, and majority of these reports are free.
Yeah. All right. Understand. Well, it's a lot of reports to read for fundamentals. so when we want to trade commodities, especially crude oil, right? We know that the price always displays a seasonal pattern. So what are your thoughts about that?
Yeah, that's another great question. So I'm just going to skip these few slides, which to reiterate on my supply and demand balance. I'm just going to share this slide to you, which is on seasonality. Now, as in any other commodities, we always understand there's always a season. Say for example, for Malaysia audience, we are all familiar with palm oil. So if you look at palm oil in terms of the prices, there's always certain period where prices tend to be stronger. Say for example, prices tend. If you look at CPO prices for the past 10 years, November, December is always a period where prices tend to be stronger, because whether it could be an issue of shorter harvesting cycle. It's end of the year. People don't tend to go out to the fields to harvest and whatnot. So when you look in the crude oil space, it's also something similar. There's always a period where you can see that prices tend to be stronger, and there's a certain period where prices tend to be weaker. So if you look at this crude oil seasonality chart based on a 20-year cycle, so you can clearly see that the green boxes are telling you month-to-month change is positive. The red boxes is to tell you the month-to-month change is negative. So if you notice, around September, October period is where you see a lot of red boxes, which means that the prices tend to be weaker around those months. And if you flip it, if you look at June, July, which is summer in US, you can see prices tend to be a bit stronger. So obviously, I think that's something for us to watch out. So now we are in August. We are going to go into September, October. Seasonality based on 20 years historical pattern does suggest that September, October is considered a weak period in crude oil market. So if you are trading the market or you're trading this space, it's important for you to watch out because generally based on historical pattern, it suggests you it's going to be a weaker month. Be it fundamental or be it just a seasonal pattern in play. So I think that's a crude oil seasonal pattern. And if you look at strong months, which is months that which has a lot of green, you can clearly see June, July is considered a very strong month. And indeed, this year July we ended the month with a positive. So it does shows that the seasonal does hold in certain extent. But again, I think this is based on historical. Things can change right up to the minute. So we do have to take it with a pinch of salt, but it does serve you as a guide.
Okay. Thanks for sharing with us. So now we learned that during summertime, the consumption of oil is higher. Okay. Now, before before I ask you the next question, right? I want to do a shout out to those people who just newly joined. Maybe you missed out the earlier information, which is we are going to organize a virtual trading game right after the session with David. So we will need you to sign up a virtual trading account first. And then if you win in this game, then you will stand a chance to win some amazing prizes. All right. So I just given you again this virtual trading sign up. So in the meantime, you can sign up a virtual trading account first. All right. So David, just now you talk about the fundamentals, you talk about the oil dynamic, you talk about the supply and demand, you talk about the current development. So now tell us how to trade. So what are the technical aspects that a trader can use when we trade the crude oil market? And then maybe how can we measure our risks when it comes to trading the crude oil market?
Yeah, I know this is always the key question that people always ask.
Yeah, we all want to learn from
this
a successful trader.
Yeah, I think there's a couple of ways to do it. Obviously, traders, you need being a trader. There's a lot of different camps. Whether you're a fundamental trader or you're a technical trader or you're both. Now, generally, a trader would take both positions. So understanding crude oil fundamentals gives you a picture. So when you approach a market with that picture frame in mind, then it does helps you in a way that whenever you position your trade or entry into the market, you have that view, the fundamental view, aiding you to make a decision. So obviously, when it comes to technical trading, there's a couple of ways to do it. So for myself is I split it into multiple steps. Now, the first step into whenever we want to create a technical trading plan, it's important for us to define the overall trend of the market. So in the sense that this plan is a trend following trading plan. Now, is the reason for us to define a trend is because I think it's always when you in a business of trading full time, and if you're trading with the trend, it does give you better opportunity. It does give you better rewards. If you are someone that is a contrarian, you want to trade against a trend. Personally, I would say it's very difficult business to be in, because when the trend is not in your favor and you are beating the crowd psychology, it's not a simple thing to do. And you really must have strong guts. So I say the first thing is you need to define the overall trend of the market. So whether are we in an uptrend or are we in a downtrend or are we in a sideways market? And obviously, if you are in a sideways market, that's obviously sideways trading strategy, which I'm not going to share today because given the limitation of time. But always the first thing we need to do is always to define the overall trend of the market. Now, once we establish that the trend of the market, next is to go into if you are familiar with chart patterns and whatnot. Obviously there's a lot of resources on the internet. As to what are the chart patterns, the common chart patterns. So once you're able to identify common chart patterns and you're able to identify area of support and resistance, then I think the next step is to really go into minute-to-minute execution, depending on the time frame that you're looking at. So in order to do that, I'm a big I do a lot of my trading or technical trading based on Heikin-Ashi, which is one part of candlesticks. In a sense that later on I'll show you later on my slides. That is slight different from candlesticks per se. And if you couple that with some of the moving averages, it gives you a better signal of entry and exit. Last but not least, obviously in every technical setup, you need to have a stop loss strategy. If you approach a trading setup without stop loss strategy, I think that's like, you're going into the market blindly. And really that's going to be creating you more harm rather than any good. So to define a trend, you can look at it visually. So if you a fervent reader of Dow theory, it does says that if you look at a trend visually, if you look at the peaks are getting higher, the troughs are getting higher, that usually defines as an uptrend. Then vice versa, if the peaks are getting lower and the troughs are getting lower, that usually defines as a downtrend. So obviously sideways, you don't see any higher peaks or higher troughs or lower peaks or lower troughs. So sideways markets are pretty much flat. So in that sense, that is a sideways trend market. So visually, you can clearly see whether the market is on an uptrend or a downtrend. So just to give you an example, so this is crude oil chart, for the past couple of months. So you can clearly see that the troughs, the lows are getting higher, the peaks are also getting higher. So generally, this market visually is defined as an uptrend. Now, visually, it may get difficult if certain conditions are not met. So obviously, another way to look into whether the overall trend of the market is on the upside or the downside is to put in an 200 EMA line. So this 200 period EMA line does shows you whether the prices are trading above or below that line. So simple interpretation is that as long as prices are trading above that 200 EMA line, it shows that the market is trading on the upside. And if the prices are trading below, it shows that the market is trading on the downside, downtrend. So besides showing you whether the market is on the uptrend or downtrend, the 200 EMA line is also a common period EMA that used by a lot of market participants. So it acts as a way for you to, it does act as a support and resistance line because it constitutes roughly about 8 to 9 months of market trading data. So in a sense that, if as long as prices break this line, it shows that it acts as a support and as well as a resistance quite well. And we have to watch out. Example, if prices are trading above that 200 EMA line or it does break that line, it shows you that the overall trend of the market has changed. And that's why a lot of market participants are also watching it. So besides showing you whether the market is on the uptrend or the downtrend, the 200 EMA line also does give you indication where the area of support and resistance are in terms of prices. Now, so once we've established the trend, the next big thing is to look into Heikin-Ashi, which is one part of Japanese candlesticks. Basically, I won't go into the formulation how to derive Heikin-Ashi. You can actually go Google it. There's a lot of research. There's a lot of materials on it. But what is key about Heikin-Ashi is that there's only 3 types of typical pattern in Heikin-Ashi. The first pattern, we have obviously the red and green bar with both the upper and lower wick. And we have another set whereby, we only have 1 week, whether it's on the upside or downside. So there's no 2 weeks on the candles, there's only 1 single week. And the third derivation will be, we have a very small body on the candles. So whenever you see a candle with 2 weeks, that shows that the trend is actually showing you weakness. And whenever you see a full body candle with no wick or only a single wick, that shows that the trend is still a strong trend and the trend might continue. And obviously, when you see a very small body candle, which is similar to Japanese candlesticks, that shows you that the market is probably have shown a lot of weakness in that trend and it might start to change. So comparing to Japanese candlesticks is easier in the sense that you don't have to interpret so much. Japanese candlesticks has a lot of different patterns combination. You have doji, you have hanging man, you have so many others patterns that you need to be aware of, and you need to identify accurately. But with Heikin-Ashi, you don't have to. All you need to do is to look into 3 different type of candles that's available on the setup, and what each of these setup tells you in terms of the trend. So if you are trading with a trend, it's important for us to Heiken actually does give you an indication whenever the trend starts to get weak, or whether the trend can still continue. So I think that's very important. Now, just to show you some dynamics of Heiken Ashi, so what I have here is a chart on crude oil based on the Heiken Ashi candles. So you can clearly see whenever you see a downtrend, you see the red candle bar, it will only be on a single wick, and the body is very white. So when the body is white, it shows that the trend is very aggressive, the momentum is there. Now, vice versa, if you reverse the scenario, if you see green bars and the body of the candle is white and with a single wick, it shows that the trend is on the upside and the trend is strong. So Heiken actually tells you or does depict whether the trend is getting weaker or stronger in a much more clearer manner compared to if you look at Japanese candlesticks. There's so many variables you need to take care of. Especially you need to be taking care of what type of patterns is it and it's a lot of interpretation involved. But with Heiken Ashi, you just need to be taking care of the three different type of setups in Heiken Ashi that's available. So another example on Heiken Ashi, you can clearly see whenever you see big red bars, that usually means that the market is going to be on a downtrend. And as long as the body gets wider, that means the momentum is there. Now, if you look at the chart, you also notice that there's no gaps. Technically, when you look at Heiken Ashi derivation, it take away the gaps. So if you are someone that's trading on the gap, or you use gap analysis as part of a trading, using Heiken Ashi might be a bit difficult, because in a sense that it takes away the gap element and it only shows you what is the trend of the market at that point in time. So again, you can clearly see, whenever the market points lower and showing you aggressiveness in terms of the trend, you can see the body of the bar, it will get wider. And obviously, red candle body bar shows you the market is weak. Green body bar shows you the market is strong. So in a sense that we can able to identify when the trend of market changes. Now, so that's on Heiken Ashi. As I mentioned earlier, using Heiken Ashi alone might not give you an accurate picture. So in order for you to have a more, I would say, a bit more precise, is to incorporate the moving average crossovers. So when you look at moving average crossovers, there's always a two set of moving averages that you're using. So the first set, we call it a shorter term moving average, which is the 9-period EMA, and the longer term moving averages, which is constitute the 20-period EMA. The reason I use exponential moving average compared to many other types of moving averages is because exponential gives a lot of weight on your current price. But do take note, moving averages on its own is still lagging because it takes account of previous data. But exponential, in the sense that it reflects the movement faster because it gives more weight on your current price. So that's the reason I use EMA. Now, if you look at comparing the 9 days, the 9-period, and the 20-period EMA, the 9-period EMA is considered a shorter term EMA. The 20-period EMA is considered a longer term EMA. So when you look at crossovers basically is defined that whenever you have 9 days crossing below the 20-period EMA, shows you that the market is going to be weak. And if you confirm that with red Heiken Ashi bars, that shows that the trend is in play. On the reverse, it's the same. Whenever you see 9-period EMA crossing above the 20-period EMA, it shows that the market is going to go higher. And you can confirm with it by looking into the green body Heiken Ashi candles. So these are common setups that you can use to incorporate moving average and Heiken Ashi candles together in order for you to form better entry and exit signals. So just to put it all together, you can clearly see that whenever you see a bearish crossovers in moving averages, which means your 9-period EMA is crossing below your 20-period EMA, that's usually the first sign that the market is weak. And as the Heiken actually showing you red color bar, that usually is a sign that the market is going to hit downtrend. So in a way that you could position a short entry, and you can hold that position until the Heiken actually shows you sign of the trend getting weak, and that usually will be the position where you exit from the market. Now, using the 9 period EMA and 20 period EMA, especially the 20 period EMA, the 20 period EMA does act as a resistance as well as a support to the prices as well. So every time when you see that prices could not break the 20 period EMA, that's usually the area of resistance. So in a way, besides using the 20 period EMA as indication of crossovers, you can also use a 20 period EMA as possible points for you to look into resistance in terms of the prices. So it acts both function here, not only as a crossovers, it also acts as resistance or support in terms of prices. So the 20 period EMA is quite effective in certain sense to indicate or to point to you where area of resistance are. Now,
Mm.
I just want to add this final bit, which I did mention earlier in the earlier slides. Volume is an important play. So if you are someone that's looking into trend, you're looking into prices, the next variable you should look into volume, because price and volume are basically the basic tenets of technical analysis. So obviously, to identify whether the trend is strong, you have to look at volume. If volume is high during that time, that means a lot of market participants are coming to the market and selling the market. So I think this volume could also be used as a very good guide for you to look into the trend whenever you enter into that position. So you can use volume as a confirmation as well when you see a trend starts to change. So you can clearly see based on this chart the circled areas, you look at the volume bars. Those volume bars are very high to indicate the market participants are entering the market and selling down the market. So volume is an added confirmation, if you look into the overall technical setup. So last bit on technical trading plan is to have risk management. Now, like I say, I think I like to reiterate again, no trading plan is foolproof, because the market is very dynamic. Market changes from time to time. If you don't have a stop loss in place, you technically, you putting yourself in a very vulnerable situation, especially when you trade crude oil market. Crude oil market can go very volatile. It can go flat for a period of time, but it can swing in an instant. So if you are someone watching the crude oil market, for example, and like if you look into the fundamental aspect of it, every Wednesday you have the crude oil inventory report. A lot of traders will avoid trading before that because the report can go either way. It shows you that even some of the good forecasters cannot really predict what is the level of crude oil supply and demand is going to be. So if you are a trader that's going to trade, especially on major news announcement, I think that's going to be very risky adventure. So in any particular plan, technical trading setup, you must incorporate a risk management plan. So what I have here is to use ATR, which is average true range, which measures the high and low bars for each of the period that you're looking at. So in a sense that if you say, for example, you're working on a 2-to-1 risk to reward ratio. So if the ATR value is 60 cents, so you should be looking to target profit at about $1.20 with a stop loss at 60 cents. So say, for example, here you have a clear signal, a clear setup for you to short the market. You have a bearish crossovers with red Heikin-Ashi candle bars. So that's a very good entry for you to short the market. And if you look at the point in time, the ATR value is about 60 cents. So if you short at $74, you should be looking at putting a stop loss at 74.60. That's one ATR value. And obviously, you work on a 2-to-1 reward to risk ratio, you should be taking a profit at $72.80, which is 120. So it's 2 times of your ATR value. So I think ATR is a very good example for you to manage your stop loss dynamically. As market becomes more volatile, you have to adjust your stop loss. You have to provide a wider range of your stop loss level. So I think incorporating risk management is important, and I think ATR is a good tool for you to start off with, in order for you to manage your risk. So I think that's pretty much the 5 simple steps that you can look at whenever you are building a technical trading setup if you are trading a crude oil market.
Well, that's a pretty solid content, David. I believe these are your real strategy, right?
Yes, indeed, it is. But
okay, so if I may
there's
ask,
a
this is
general disclaimer. If you are in any, what I have here, there's first of all, there's no holy grail. Second thing is that what I have here is considered very simple and basic. Obviously, you need to do back tests. You need to back test certain every type of strategies that you are involved in. You must in certain ways back test the particular trading setups, because you never know when market changes. You also need to change your trading plan. But what I provided here today, the 5 simple steps, is able for you to start off with in the market. But keep in mind, market change quite drastically nowadays. So importantly, you must also be flexible in the sense that to adapt to any change in your technical trading plan as well.
Okay. So do you use this strategy on what time frame? Is it daily
It's
candle or
on
is
a
it hourly candle?
yes. Every candles that I look at is on hourly basis. Anything
Hourly
that's
basis.
below hourly is considered to be too many false signals. So you will be in and out of market very frequently. Then there's a lot of cost involved. So an hour will be good enough. But again, like I said, when it comes to data-driven days, you should really keep to even lower time frame. But normal days, discount any news, an hour time frame should be sufficient.
Do you trade news or you don't?
At best as I can, I try not to, because nowadays, with many of the algos that's participating in the market, news are the prices will reflect the news instantly. There's not much room for you to write. So obviously, it goes back to your chart basis, your trading plan basis. If it's in line with your trading plan, there's a setup, you just have to take it. No, but no, for me personally, I would tend to avoid news because it's going to create a lot of volatility in the market. And like I said, it can go either way. And nowadays, if you assume the news to be bullish, the price can react bearish. So I think that's kind of dynamic, and you have to be adaptable to it. And that's something that you have to be very careful of as well.
Okay, yeah. Thanks for telling us how can we start trading the crude oil market. With what a plan and strategy that we can consider using and incorporating into our trading plan. So when we talk about crude oil, right? So when I want to start, right? Because let's say if we're new, right? So I want to start trading the crude oil market. What are the products that are available on the exchange? And then is there any sufficient volume for us to access the market?
Yeah, that's another very good question. Well, I think as if you have an interest to start crude oil, definitely there's a lot of if you look at CME suite of products, there's a lot of crude oil products that's available for you to trade. Obviously, one will start off with CL, which is the standard crude oil contract, which is every tick is $10. You can even participate in the mini, which is half a size smaller than your standard contract. So obviously the these two margins for these two contracts differs. But do speak to Kenanga representative. They may provide you the latest margins, and they can consult you better in terms of which product to choose. Then obviously recently CME has also launched a new micro contract, which is 1/10 of the standard size. And I believe as a retailer with smaller margin product, it gives you greater flexibility. So do consult with Kenanga representative on these 3 products. I think they can guide you better and they can offer you better advice. Now, in terms of volume, you look at crude oil on averagely. If you look at active months, right now it's September contract, you are looking at about easily 1 million total traded volume on a single month itself. And even the latest product that they launched back in July, the micro MCL, the micro WTI, you are trading on average about 40 to 60,000 contracts per day. It's very liquid volume. You don't have to worry about big wide bid and ask spread. The bid and ask spread is actually very thin, and volume is actually very liquid. So you don't have to worry about entry and exit costs, because generally is actually negligible. So I highly encourage for you to get advantage to participate in either of the semi contracts. One can start off with CL, which is a standard contract, or even you can look at a mini contract, which is half a size of a standard contract. And obviously, with the new micro crude oil, which is 1/10 of the size, it will make it even more accessible for the normal retailers.
Mm. Okay, thank you so much, David, for sharing with us, about the crude oil standard contract and also the mini contract and also the micro contract. So we know that there are actually sufficient volume, lah, huh? Okay,
Yep.
so I think time is almost up for David. Okay, if any question for David, you may ask in the Q&A box now. Then we will address the question. David, is there anything that you want to add on that I didn't manage to ask you about crude oil?
Yeah, I think just to conclude, I think if you are someone new to the market, to the crude oil market, it is worth to put your hands in, for the fact that it's a very, I wouldn't say it's easy product to trade. No, it's never an easy product to trade, but it gives you a lot of scope for you to cover, and those scope are manageable in a sense that you want to look into supply and demand dynamics. I already highlighted what are the key supply demand to look at, what are the key supply and demand drivers to look at. And if you look at technical setup itself, as long as you manage, you're in a business of trading a trend, you manage to spot whenever a trend changes, or the trend, whenever you spot trend weaknesses, I think you should be comfortable enough. But always important is that risk management is always an important part of your trading plan. You must have that. If you don't have that, I think you really you put yourself in a very vulnerable situation. Um, I don't usually look at where price is going to go, but like I said, if you look at the overview of the crude oil price, the 80 US dollar has been very strong resistance. Whether it could break that again, it really depends on how economy is going to go with. Now with the ongoing Delta variant is getting very aggressive, it might put a dampener. So I think the range is still between 60 to 75, that range. But then again, as you trade the market, you don't have to be, as long as you keep this in mind as your resistance level. You should be watching on the daily trend, whether is it going to be on an uptrend or a downtrend basis. I think that's more critical as a day trader. So I think that's pretty much why I want to sum it up for my presentation.
Are you a intraday trader or you are a swing trader?
A good question. Now I will try to put myself as an intraday trader. Carry a position overnight is could be very risky. Like news can come in any time of the day. Like I said, crude oil is also very sensitive to geopolitical risk. And now you look at geopolitical tensions getting very intense, especially with US and China. So it's best not to carry a position overnight. But sometimes if you have to, you're forced to. No, then you have to manage your risk in a very comfortable level. Because if you carry overnight, you definitely going to expose yourself to overnight risk. So I'll limit myself to intraday basis, but if I need to, I don't mind to carry the position overnight as well.
Okay, now we know that the CME CROI is the US market, so I think it tends to get more active during the US trading hours, right? So, what time frame do you usually trade for this CROI contract? Do you stay out
Now,
until the wee hours in the morning?
I try not to stay up into the wee hours. So normally crude oil contract during Asian hours, unless there's Asian news like US China GDP is released, that's where you need to be careful. Crude oil can react. Now, when you trade on the night market, because crude oil is getting very active in the night market, especially when Europe and US market starts to open, that's where crude oil can get very active. And it's not very Asian friendly hours, but between 8 to say, for example, 11:30 to 12, I think that's usually you see a lot of volume. And data release is about 10:30 at night. So during that time, you tend to see strong volume. So as long as the trend that shows you a bit of setup, you can be in the market, and between a comfortable ticks, you think it's comfortable enough for you to take a profit, then you should be out of the market. And trading above after 11 or 12 wouldn't be recommended, because it can be very stressful if you are trading on the Asian hours. Trading until the wee hours is not going to be beneficial for you overall. So I tend to avoid going into very late night. If I can close out the contract, if try to be as soon as possible when the trend comes.
Okay, maybe you can share with us like the distinction between the Asian hours and the US hour. Like in terms of volatility, right? During the Asian hours, like how many average ticks are usually in the Asian hours, and in the US hours, what is the average tick?
Okay, on I don't have the specific statistics in hand, but just at the back of my mind. Now,
Mm-hmm.
Asian hours right now, based on if you talk about the ATR value on crude oil right now, is daily basis is about $1 to about $1.20 or $1.50. Asian hours will probably move between um, 50 to 60 cents, and when it comes to the night session, it can easily go above $1. So that's where you need to be careful. So, Asian, I would say if you talk about percentage of volatility, probably between 30 to 40% of the volatility. The rest of it is always in the night market.
Okay, I see. All right. Thanks for sharing with us this information. So, if any question for David, you may ask in the YouTube live chat or ask in the Facebook comment. So, we will pick up your question here. And then Lai Ming say that very good presentation from David. Okay. Thank you, David.
Thank you. Thanks for the
Yeah,
generous
for those of
comments.
you who haven't signed up an account yet, sorry, this is a virtual account, not the not the Kananga Futures trading account. Okay, this is a virtual trading account to join our virtual trading game by Kananga Futures later. So you can sign up here, and then we will facilitate the enrollment in a short while. And then if you win in this game, then you're going to get some amazing prizes away tonight. All right. So, any more question for David? Okay, maybe we will keep David on the line in a moment to wait for any more questions. So, David will stay here for a while, and then
Sure.
let me introduce our next speaker. So, today we have two speakers who are joining our show today. So, let me introduce our next speaker, who is Nicholas. Hi, Nicholas.
Hi Shane, hi David.
Okay,
Hi,
how are you?
hi, good, doing good. How you think you
All
guys
right,
did a
great.
great presentation for David as well.
Okay,
Great information over there.
yeah, I also learned a great deal from prop trader David.
Yeah.
So I personally hardly trade the crude oil futures contract. So I
Yeah.
also learned a lot from David today. So let me briefly introduce Nicholas. Nicholas is assistant manager of the broking and client relationship management from Kenanga Futures. So Nicholas is going to talk about virtual trading by Kenanga Futures. So we are going to organize a short mini game. So for those of you who win in this mini game, you're going to walk away with some prizes. Okay. So Nicholas, why don't you start telling us what is this game about?
All right. First of all, thanks Shane for the introduction. Let me try to share my screen. All right. Can you see my screen? Good.
Yes.
All right. Good. Okay. So before that, just a short disclaimer over here. And then, all right, so this virtual trading game, you can just scan this QR code and then you can just key in this website link over here, and you can just sign up. It's free. We just launched this game this year, and the feedback from participants so far is very positive. They like this game very much, and they think that this game helped them a lot, especially for the beginners trader to familiar with the futures market, especially let's say you have experience in trading equities or experience trading shares, but futures is something new to you. And then this game might be a very helpful tool for you to start on. Right. So the objective that we create this game actually is to provide our novice trader an avenue to determine your individual's trading objective, also to identify your risk tolerance level, because everyone is different, right? Some people is like risk taker, some people is like risk averse. And besides that, we also this game will also help you to learn different characteristics of listed derivatives before you really jump into the real market. Okay, so these are a few things that you will learn. So first of all, so try to just scan this QR code and then just key this link. And then the next thing, you should be able to see the screen over here like that. Okay, it will lead you to this page. Here is the landing page of our game. You can actually just click start button game, or you can just want to read more about what is this virtual trading game is all about, how the objective and what you can learn from this game, and some key features over here. That's it. So before that, you can just actually just click this button, and it will bring you to this page over here. If you have if you have signed up before for our Kananga virtual trading game, so you can just proceed to log in. For those which is new to this game, you can just click sign up, the button over here. Then you can upload your profile picture if you want. Key in the display name. This will be shown to everyone in the game environment. Key in your name as per NRIC, not your NRIC number, yeah, just your name only. Okay. Mobile number, email address, your gender. If you have a referral code from your friend, then you can key in. If not, you can just leave it blank. Choose your nationality and also state, and set your password. Just agree to these TNC and PDPA, then check that you're not a robot, and you are good to go. So after you click sign up, you should be receiving one email sent to the email address that you registered over here. This is to verify that this is the email address that you're using. You just have to click the verify button once you receive the email, and then you should be able to proceed to log in, right? So after you sign in, you will be able to see this page over here. So I think I will continue later on. I will give you some time to sign up, and also for those that are new to this game, just to familiarize and just read about what this game is all about. Yeah, Shane, pass back to you first. Is there any questions for David?
Yeah, there is one. So before we go to the question, right? So this virtual trading will let you experience what is futures trading without having to risk your hard-earned money. So you can sign up for this virtual trading by Kananga Futures, start an account and play these games so that you can have a taste on how does future trading looks like, and then how to calculate the margin and so on. All right. So this is a very impressive games by Kananga Futures. So you can for while we are waiting for all of you here to sign up an account. So if you have any question for David, then we will address it now, huh? So I see one question which is asked by Zhen Xing Kwok. How do we trade FCPO spread together with normal futures trading?
Okay, this is a good question, but I'm not sure whether it's relevant to today's topic, because today's topic is talking on crude oil.
Crude oil, right?
Well, I mean, given my experience in trading palm oil contract, trading spread and trading normal outright futures contract is totally different. There's different dynamics, and all I can say is you need different approach to both markets, both types of. Although it's palm oil market, it's the same market, but trading spreads and trading outright is two different things altogether. So it's different dynamics to it. That's all I can say.
Okay. Do you trade intermarket like soybean oil and also the crude palm oil? Intermarket spread.
Now, I use it as an observation to trade palm oil market. I don't necessarily be involved in the intermarket because there's a lot of variable to look into it, especially you look at intermarket for palm oil, especially. No, one can even look into doing palm oil with crude oil. But then again, there's a relationship between both the markets. But there's the emphasis. I think the major narrative here is that you should focus on one particular product, and if you are able to capitalize on the opportunity of that particular product, stick to it. Going to a new product, especially although it's related, but it's different dynamics altogether. Like for example, crude oil and palm oil is different dynamics. Although the price performance, it may have a bit of relationship, but ultimately it's different dynamics. So I would say is ultimately, if it's best to focus on a particular product, and if you can capitalize on certain opportunities and it's doing well for you, just stick to it. So
Okay,
I
now
hope there's more questions on crude oil rather than on any other markets.
yeah, no problem. Just now you mentioned about, in the beginning you talk about the fundamental analysis of a crude oil market, then follow up by some technical trading plan to trade the crude oil market. So what do you think from your experience, right? How many percentage of success comes from FA by understanding the seasonal pattern, fundamental news, the inventory, and how many percentage of success comes from your own trading TA technical side?
Okay, very good question, very relevant. Now, if you just based on the presentation that I just presented, just take one example on seasonality. So if you understand periods where it's weak, understand period that is strong, you say for example, if you based on the chart I showed you earlier, we are going into August, we are going into September. These are the periods where price tend to be softer based on 20 years historical data. So with that in mind, if I see weakness in the market, or we won't say weakness, if I see strength in the current downtrend in the market, the short-term downtrend in the crude oil market, I will be thinking of areas for me to short during a rebound, because based on the historical pattern, the seasonality, it tells me that as I approach August or September, out of 20 years, only 3 or 4 years that's positive. The rest of it is, most of these months are negative. So with that frame in mind, I will use that as an approach for me to form a little bit of bias whenever I approach those months. So that's how you incorporate fundamental into part of your technical. And going into terms of percentage, of course, majority of the decisions that you make at the point in time is always, for me, it's always based on TA. As long as as what I showed you, the trend, the crossovers, the Heiken-Ashi candles are there in place, that's when I take a position. But fundamentals does give you a bit of sentiment, whether if I see a major rebound, is it going to sustain? Fundamentally, is it going to make me be comfortable to hold that rally? So that's all these are playing into dynamics. So I won't discount that. Although fundamental doesn't really give you a very precise picture or really into most of the decisions, but it does help to paint you a good overall sentiment of the market. So ultimately, TA is still pretty much dominant in the sense that it helps you with the entry and exit.
Okay. Now, this one I mentioned about a few crude oil contracts that we can trade, right? So to trade a crude oil contract on CME, which is the most active month?
Right now it's September. So one way to gauge on which is an active month of a particular commodities is always to look into the volume. So as long as as you see in the futures contract, there's so many futures contract available for you to trade. I think crude oil is out to at least 3 years or 4 years out. It's various, but it's always very active on the first 5 months, and the most active is always the September contract right now. So a way to gauge is to look into the volume per se on a particular contract. So as long as that contract has the highest volume, that's considered the active contract.
Okay. All right. Thank you so much, David, for sharing with us discover trading opportunities in the CME crude oil. So I think we all learned a great deal today about the crude oil market. So thank you for sharing with us the FA that we need to remember, and also the technical trading plan on how we can trade the market using a strategies, Heiken-Ashi, and also how to do risk management using ATR indicator for teaching us all this, sharing with us your secret recipe to win in the market. Thank you so much, David.
Yep, my pleasure.
All right, hope we can interview you once again in the future. All right. So I will put you off the line right now, and then I will hand over the session to Nicholas. So for those of you who want to trade crude oil market, yes, Kenanga futures also have the E-mini crude oil futures. You see, I see it on the screen already. So you can actually join the virtual trading by Kenanga futures to experience E-mini, the crude oil futures. All right. So for those of you who are still here right now, if you like the content that is done here on this social media live, you can appreciate it. You can smash the like button, okay, and also share this Facebook and YouTube video out so that so we can reach out to more of your friends and family, and then they can learn from it. So right now we're going to do this virtual trading by Kenanga Futures. So yes, hand it over to Nicholas to moderate the session.
Right. Thanks, Shane. All right. I hope that all of you have successfully signed up or logged into this game dashboard. So I try to emphasize again, this is a virtual trading game environment. This is not real trading under Kenanga Futures. If you would like to open a real trading account with us, you can always just click this open an account, or just go to our website on top here, just click open an account. everything is online. You do not need to sign, no signature, anything, no printing. You just have to download the form, fill up, just email to us. Just that simple. All right. Okay. So back to this virtual trading game environment. Today we're gonna play a game over here, and you got a chance to win prizes worth up to 55 ringgit. We are giving out a Netflix gift card worth 55 ringgit to the top 5 winners for our private game session tonight. So before we go to the private game session, let me introduce you some of the features and some of the functions in the game here. So after you have successfully logged in, you can see there's a public game area and also a private game area where we're going to play later on, all right? So for public game area, you can play as many times as you want. And for private game, you will require a password to join, right? For public game, you can just click anyone. So I will go through some of the things here like leaderboard. After you play with your public game, you can compete with your friend. Let's see who a better trader in terms of like in the weekly chart or in the monthly chart. You can just compete with your friends. So on top of here, contract specs. If you want to know more about, let's say, crude oil, you can just click NYMEX, just select crude oil, and all the contract specs details is here. If you want to know more and the more updated one, you can always refer back to CME group. They will give you a full contract specs over here. And then if you would like to invite your friends to participate and challenge you on this game, you can always just key in their email. You can just key in as 10 emails at one shot, or you can just click in all of these links over here to share this invitation link via your WhatsApp, your Facebook, or even your LinkedIn. Or if not, you can just copy a referral code just to them, right? Next thing, game walkthrough. On this game walkthrough over here, he will show you how the games works, which if you would like to go through later on, you can go through it with it. So here's the rules of the game. So it says pretty long. I will just shorten it for you. I will summarize for you, and during the game, when I explain later on. Contact us if you have any questions. You want us to contact you. You can always just choose the way that you want us to reach out to you, either by email or phone number. Put in your subject message, just hit send. We will contact you as soon as possible, right? And here are some educational links that you can just click on it, and you can just watch some videos, some fact sheets that we will just publish on our website. We also have this one-on-one coaching session that you can just book with us. You can ask any questions to our futures broker, and of course, check out our events, and the event calendar, and of course, this upcoming event. What is the next one? So without further ado, let's go back to this game. Over here, you can see there is a lot of game listed. Over here, you can see some people asked about palm oil just now. We have the famous indices over here, US indices, micro indices, Dow Jones, and of course, we have E-mini crude oil, which is the main topic for today. From here, if you want to trade this crude oil, you can always just move your cursor to this eye, just to understand this exchange. This crude oil product is listed on NYMEX exchange. The product name is E-mini crude oil futures, and initial cash balance, I'm giving you $30,000 to start with, meaning I'm giving you 30,000 virtual cash to start trading. So the maintenance margin, initial margin for this product is 2,805 per contract. And then the game duration is 60 days. And your trading day is going to be 10 seconds. What it means is every 1 day, it's going to last 10 seconds only. Instead of 24 hours a day, right? You will every 10 seconds, you move to day 2 already. So you just have to hit this join button. So you can see we have open, high, low, close over here. Open, high, low, close with volume. There's a bar chart over here. You can zoom in, zoom out. You can see there's RSI and MACD. Okay, indicator over here. Here, order journal will record down all your trades. You can see every 10 seconds countdown to 0. It moves to the next day, and we give you the price for that. 1 day, for simplicity purpose, and for you to understand the game better, we will just set one price for you. There's no bid ask price and no market depth for you here first, because in this game we want you to familiarize with the futures contract, how to trade futures first before we add in all the complexity things inside here, right? So you can see, if you want to trade, you can always just key in the quantity that you want to buy or sell. If you think the market is going to go down, you just have to hit sell, and that's it. On day 7 over here, you sold 3 quantity at this price, the price that you set over here. So if you like to close a position, you just have to close, hit buy. 0 means close your position. Okay, so now your position is closed. Just that simple. All your net position here is recorded. Your initial cash balance is stated here. So you can see by making this trade, I made 1,002 US dollar, and here's my net equity and so on. So you can always adjust the chart over here. Okay. So if you want to refer back how much is your maintenance margin or initial margin, you can always go back to this eye over here. So today we're going to play this private game. I hope you enjoy the session. So let me repeat again. The top 5 winners, we are giving out Netflix gift card worth of 55 ringgit. Right. So for this private game, you just have to click this private game section over here. Scroll down to the bottom. Choose this 12 August Facebook Live event. 12 August QM. You just have to click join, and it will prompt you for password. The password for this game group is called Crude Oil. Capital letter CRUDEOIL. That's it. CRUDEOIL. Crude Oil. Search for this. 12 August Facebook Live. Password is Crude Oil. CRUDEOIL. Okay, let me see. Okay, I see a lot of people joining in. All right, I'll wait for a few moments. Okay, I still see people joining in. All right, we are giving out Netflix gift card worth of 55 ringgit to the top 5 winners. So please come and enjoy the game. Maybe you will be one of the winners. Okay. Wow. All right, I see many people still joining in. I give you some little bit more time because we can't wait too long. I see many people are too excited to play this game. We will start at the same time. That's why I'm waiting for everyone. We'll start at the same day, right? Day one over here.
If you face any difficulty in the enrollment, you may type in the comments, so we will get Nicholas to address your difficulty.
Okay, I see someone is asking for password. The password is called Crude Oil. Let me show it again. The password is Crude Oil. Right?
Capital letter.
Capital letter, yes. All cap, Crude Oil.
Crude oil is joined together, no space, correct?
Yeah, no space.
Each round is 10 seconds, remember? 10 seconds, right?
Yeah, one day,
so
10 seconds. Every 10 seconds, move to day 2 already. Pretty fast,
so
huh?
you
You need to
make
be pretty
a
fast, huh?
fast decision.
Within 10 seconds, you need to think you want to buy, you want to sell, or you just want to hold, just do nothing. Is there any more questions? Let me see. Any difficulties in joining the game or logging in or anything? I see a lot of people join in already. Okay, yeah. All right, I think we'll just start. I see a lot of people is already here. Okay, so same thing. I'm giving you 30,000 US dollar to start with. The margin for this mini crude oil is 2805. So with 30,000, you are able to buy one shot, like at least 10 contracts ready. So please enjoy the game. The whole game will last for 60 days, which is going to be 60 over here. The whole game will last like 10 minutes only. So I will just let you focus throughout the game. And then we will start this game in counting down 5 seconds. 5, 4, 3, 2, and 1. All right. So now it's counting down day 1. Once it's finished counting down day to 0, you'll move to day 2. Okay. Please enjoy the game. All right. The game has ended. 60 days passed. 10 minutes over. How's everyone doing? Is it very excited for you? Like every 10 seconds, you need to make a decision and you move to the next day already. All right. From my side here, I see very interesting data over here. I see most of you guys very gung ho, no? I give you like 30,000, you already hood everything 30,000. Oh.
The
Wow.
win is like that lah.
Wow, yeah, huh? Wow, I give you virtual cash 30,000, you just hit everything 30,000 only. But okay, so far I see the ranking all very good. You guys making very good profit over here. Let me try to show you what are the top fields ranking over here. So you can see for the top 10, top 9, I'm ranked 16 at this point. So you can see the top 9 over here, all making double-digit profit. Which is pretty good. Over 6. Why I put 60 days over here is because 60 days is also equivalent to almost 3 months of trading. 3 months trading. So 1 month of trading is about 20 trading days, and exclude your weekend. So if you can able to survive over 3 months of trading period, you should be doing good in futures. Since in the game over here, you have practiced yourself, you can try yourself. And of course, in the public game, you can try as many times as you want. Just practice your strategy, your skills. And if you can survive and you can consistently make a good profit over here, I think you should pretty consider like open a real account and try out. So far double digit is pretty good over 6 months. It's very decent profit over here already. Yeah, so yeah, you really should try it out. So over here, of course, if you should also congrats to the top 5 winners over here. RCE, yeah, the second one, Yongjing, Snorlax, MY, and Jeffrey Ng. So congrats to the top 5 winners over here. To redeem your Netflix gift card worth of 55 ringgit, kindly ensure that your contact details in the profile over here are accurate. You can just always update your profile picture. Profile over here. You just click your profile. If you want to just change, if you notice there is a typo or anything in your mobile number, anything, you can always just click edit and just change it over there. All right. So just ensure your contact details in the profile is accurate, and do expect a verification call from Kenanga Futures within this week or maybe next week. For is as also part of our verification process. So failure to do so will result in prices being forfeited and hand over to the next qualified winner. So if you notice there will be someone calling you, please pick up. And please take note that we will not ask for any private information such as your IC and also banking details. We noticed that recently we have a lot of scams call all these things. We will not ask for any sensitive information. We will just confirm that it's you play this game, and we just send the price to you. Just that simple. Okay. So Shin, I pass it back to you for the session.
Okay. Thank you so much. I see that our participant today, go all in. Okay. All in
Yeah,
to win
pretty,
the Netflix gift card. Okay. I have to all in. Okay. Of course, in the virtual trading, you can all in. You can maximize your margin. Okay. But in the real trading, you got to leave some room for margin maintenance. Cannot go all in. In the real trading, in game to win, no choice. We got to, we got to, it's now or never. All right. So let me just share my screen. Just give me a minute. So thank you so much, Nicholas, for sharing with us about the virtual trading by Kenanga Futures. So if you are interested to play more, yeah, you can head over to the public games to hone your skills, to understand more futures contract. There are a lot of contracts available on Kenanga Futures virtual trading. You can trade not only the local contracts, but also the foreign contract, like the one listed on the CME exchange. All right, so now we have exciting news to let you know. Before that, I think I need to share the link here. Okay, so just give me a minute. I'm giving you this accelerate into the future link. So what is this accelerate into the future campaign about? So this campaign is happening from 2nd August, which is earlier this month, until 29th of October 2021. So this is about a 3 months period for you to participate in this campaign. So this is a campaign by Kenanga Futures to reward existing existing clients and also new clients who will sign an account with Kenanga Futures. So how do you win? How do you stand to win some of the amazing prizes? The total prizes worth is 50,000. Okay, Kenanga Futures has prepared 3,000 worth of prizes for you to win. So there are two parts. Allow me to briefly tell you about it. Of course, for more information, more accurate information, please refer to the TNC. Okay, so I've given you the link in the how to participate in the campaign. So part A is futures trading volume. So if you happen to trade the highest volume in this at the conclusion of this campaign, then you'll stand to win. Win what? You'll get to win the Dell XPS laptop. You get to win a QLED 4K smart TV, 55-inch, and then you get to win a PlayStation 5. Okay, so and we also have consolation prizes and also lucky prizes to be given away even if you do not get to achieve the top three trading volume. Okay, don't worry, there are also lucky prizes to be given away, which is in the form of portable speaker. So this part A is for rewarding clients with trading volume. Part B is where you can actually open an account with Kenanga Futures, and then so long that you trade during this campaign period, for new client, you open an account, you trade, then you stand a chance to win some vouchers. Or even if you're already existing clients with Kenanga Futures, and if you refer your friends to trade with, to open an account and trade with Kenanga Futures, you also get to earn some e-vouchers from Kenanga's Futures. All right. So this is eligible for the first 100 people who participate in this campaign. So yes, there are 50,000 worth of prizes for you to win, whether you participate in part A or part B. So I've given you the registration link to join this Kenanga Futures campaign, which is Accelerate into the Future campaign, happening from 2nd August to 29th of October. So if you're keen to trade futures contract, then why don't sign an account today with Kenanga Futures and participate in the campaign, and probably you will stand a chance to win some prizes home. All right. So yes, thank you everybody for joining this session to discover trading opportunities in the CME crude oil, brought to you by Kenanga Futures. I hope that all of you here have learned a lot enormously about this CME crude oil market, to understand what fundamental reason that drive the crude oil prices and how we can come up with a trading plan, a simple trading plan to trade the crude oil contracts on the CME exchange. All right. So thank you so much, Nicholas and David, for joining our session today. And then I hope all of you here have a great, pleasant rest of the day. See you next time in our social media live streaming. Okay. Bye, everybody.